interest rates are coming down in Canada. Oh, that was a bait. In today's video, we are going to talk about the latest news by Bank of Canada on the interest rate, how this is going to impact our housing market, and where is Canada growth projections going.
The Bank of Canada will make their first interest rate decision of the year
The question, though, isn't what happened in 2023. The question on everyone's mind is where things go from here.
First, let's talk about the news that came today. The prime lending rate will stay at the same level, that is 7.2%, because the overnight lending rate will be 5%. This is the fourth time they kept the rate at the same level. Now the monetary policy discussion have changed. Rather than increasing the interest rate but lowering the interest rate, Canadian economy recently shifted into excess supply. This means there is more material available in the market rather than more consumers. Because of inflation pressure, people are spending less. So this is a good news overall for Bank of Canada, where they were targeting inflation number in the range of 2 to 3%. As of now, our inflation for the month of December is 3.4. So bank was cautionary to decrease the interest rate as of today. So they kept the interest rate at the same level. From last 2 years, Bank of Canada increased the interest rate for 10 times to curb the inflation problem. We saw the peak of 8.1% last year. Now we are standing at 3.4% inflation numbers already, so which have given respite to Bank of Canada. As interest rate is higher, business are spending low, consumer confidence is less, unemployment rate is rising. Even you must have heard the stories of reverse migration. This is all because of higher interest rate and the economy was almost in recession. But for 2024, Bank of Canada is predicting the GDP to grow around 0.8% for the first quarter, which is supposed to pick up by the end of the year or 2025 to almost 2+ numbers. So that will be a good sign. But for the growth to sustain, the people need to spend. Most of the economists are predicting that Bank of Canada will start lowering the interest rate by April to June. Now the next meeting of Bank of Canada is 6th of March. Even we are anticipating that interest rate will remain flat in that meeting also, but by April or by June we'll see the interest rate start coming down, because the inflation is already projecting to touch the point of 3 by end of the year. It will be around 2.5%. If you see the overall inflation, shelter is the bigger component of that, because interest rates went up, which pushed the pressure on payments of the landlord, which were transferred to the tenant. So overall the cost of living went higher in Canada. Let's go 1 year back. Bank of Canada hikes key interest rate again but plans to hold rate. Just because of this, our property prices went almost 17% up, particularly in GTA, in next 4 months. So imagine so many buyers sitting on the sideline because of the confidence of this news. They started buying homes again. If you follow the same trend, spring market will be hotter this year also. But on the other side, Bank of Canada also announces that the interest rates are coming down. It will be fuel in the fire. That's not a good news for the first time home buyers sitting on the side. Another thing is demand and supply gap. As per the immigration plan of 2024, we are anticipating almost around 500,000 new immigrants coming in. Those are the qualified people. They have savings. They're coming with the families. They need a place to live, place to rent, which will put pressure on our housing market. As per our immigration minister, there will be cap on international students for next 2 years. Obviously, this is a respite for our rental housing market. But the thing is, these things will impact us in the future. For 2024, the impact will be less, and we will see there will be demand and supply gap, specifically for first-time home buyers. To help the Canadian economy, it is projected that we'll see interest rates coming down. It's a good news for employment, for the business to spend more, to improve unemployment rate, to attract more skilled labor into Canada and improve the overall Canadian picture in the whole world. But for housing, it might go on the other way around, because a lot of demand and supply gap is there. Once the interest rates start coming down, home affordability of buyers will be up and they'll be in the market again. Share your thoughts, like what's a better way to boost Canadian economy but sustain the growth in the housing market. And we will see you in the next video with another update.